Moving a step closer to total decontrol of sugar prices, the government today lifted the monthly free sale cap on the sugar companies. This means they will be able to now sell up to 10.4 million tons in the open market. Millers can also decide the quantity and price at which they wish to sell sugar in these coming 6 months. To get more on the analysis of the same, let's get in then Abhinash Verma. He's Director General ISMA and he joins us on a New Delhi phone line. Abhinash, hi, welcome. First of all, how are you reading the number 10.4 million tons for the next 6 months and also the monthly cap being taken off? How would that impact the mills?
I see three very important decisions in this open market sale that the government has released today. First of all, they have moved from a quarterly release to a 6-monthly release. So gives much more flexibility and much more freedom to the sugar mills to actually plan their cash flows and decide on their sugar sales on commercial considerations. Second, as you mentioned, there is no longer an inter-month restriction, which means I can sell all my quota in the month itself, so I can get better cash flows, reduce my interest burden. Thirdly is the decision, very important decision, that unsold non-levy quota at the end of the 6-month period will no longer be converted into levy sugar, which means there is no penalty anymore on this. So all these three important decisions are going to give us a lot of flexibility and we can plan our cash flows much, much better now.
Also, as the markets are reading it, Abhinash, that this could be really another first step in coming off the expected reforms that the markets are expecting really as April starts. How are you reading it? As positive as that?
Yeah, it is certainly positive. I would say it's another step towards reforming the sugar sector. And therefore, all the more eager and all the more we are waiting for the sugar decontrol to happen very, very soon.
Abhinash, we have seen prices decline quite sharply in the recent days, below their cost of production as well. What's your sense coming in for that?
See, the biggest surprise which has actually come about is from Maharashtra. The Maharashtra state was actually talking about a sugar production of around 55 lakh tons at the beginning of season. But it is now turning out to be over 75, 77 lakh tons. So whatever surplus which is coming out into the market this year is actually coming out of the Maharashtra sugar production. And every day we are getting this surprise. However, it's very important to note that sugar production from Uttar Pradesh may not actually touch the 80 lakh ton number that people are talking about. It can close slightly lower than that. So the total production that the market is expecting around 250 lakh tons may not reach that level. We may close slightly below that, about 246, 248 lakh tons. So it's basically the prices have come down because of some excess production from Maharashtra, which people were expecting on the lower side. So we expect now that the numbers are coming out, everything is on the table now, that the prices should now stabilize with the summer demand coming up. Let's hope that the prices move up to let us cover our cost of production.
Well said, Abhinash. So when's the next day that you will be watching out for in sense of more policy information coming in from the government?
I can't give a date to that. Yes, we will be waiting for the cabinet committee to again meet. Probably it's going to happen in the first week of April. So that's a very important week for us.
Point taken. Thank you, Abhinash, so much for joining us with your sense on making up all the statements that have come in from the government today. And of course, more reforms is what the markets are expecting, but that's only going to be in the first week of April. Remember, we are headed towards March end, and it's a week of festivals as well. Well, that's about sugar, but Black Pepper Trader Association has filed a writ petition in MP High Court against NCDEX. The hearing for which is posted for 2nd April now. The petitioners have asked the court to direct NCDEX to deliver pepper according to the contract specifications and also compensate them for the price difference and warehouse charges. The members of the association have buy positions of 6,935 tons of pepper worth nearly 300 crore rupees. FSSA or Food Safety and Standards Authority in Kerala have sealed NCDEX warehouses on detection of adulterated pepper. The matter of pepper spiked with burnt diesel and mineral oil has been in knowledge for some time, and the reaction of course has been into the prices as well. Nearly a percentage point decline coming in for the pepper prices in the intraday market today. We keep the focus on the agro trades, and Desmond Shishi, CIO Duxton Asset Management, joins us on the show from London. Desmond, hi. How do you view the rise in the cotton prices in the past 1 month? How will farmers in India and China respond to the price rise?
Yes, the cotton price is a very interesting price. It's one of those prices that are out there that the price doesn't reflect either of two realities that can happen. One, China can release its cotton from the warehouse, which would result in the price that's currently in the market being very high and the price going down, or not release, where we see the price being very low. It is something that we, for our funds, find very difficult to make a call on, so we tend to avoid it as a commodity. For cotton farmers in China and India who have to make a decision on next year, we think the fundamentals of cotton pricing is still good over a 2 to 3 year period, so they may continue to take the risk and plant their cotton.
Sure. Desmond, we were just discussing about sugar, the domestic policy matters, of course, but what's your view on the global sugar supply and prices and the global sugar market, which is under pressure due to surplus production? Do you see a rebound in the prices anytime soon?
Here I can give a more definitive answer. We believe sugar is very much undervalued at the moment. There are a number of risks outside there which have caused the price to be quite low. This includes the issues in Uttar Pradesh in India around the mill situation, all of which we believe is fully priced into the sugar price at the moment. So therefore we do see medium to short term price increase potential in the sugar price.
Desmond, also, what are your best picks in agro-commodities for the next quarter now?
We would, again, I would repeat, we would like sugar. We also think corn is still a good bet.
Desmond, those are the bullish bets, of course, but which agro-commodity picks would be your bearish on in the near term?
Cotton and wheat. Right, but again, let me rephrase. Cotton and wheat we're bearish in the very short term. In the medium to long term, we are still very bullish. We are bullish in the whole soft commodity space because we feel that if you view soft commodities and hard commodities are mining off a specific mine. So you have an iron ore mine, you're caught with the iron ore prices. In soft commodities, you can grow many different commodities on a particular piece of land. So you have the capability to swap based on prices. This has been happening for the last number of years, but the ability to continue to swap and then to supply enough soft commodities to meet the global demand is getting less and less. We like to look at this as what we call peak food. If we think back 10 years ago, we had a peak energy problem. We were looking as to where would the additional energy that we needed to maintain growth would come from. What was the response? The response was a big increases in price, which allowed us to produce more energy, which now we have less of a worry as to where energy is going to come from. From food and for soft commodities, we have a very similar issue.
All right, Desmond, we'll let you go at that. Appreciate you joining us with your views on all of those agro-commodities. So that's Desmond Sheehy, CIO Duxton, with his views on where he sees the corn, cotton, sugar and iron ore prices headed into the next quarter now. Let's get in then. Ajay Kedia, he's MD and Research Head, Kedia Commodities. Also joining us is Vijay Bambani, author, CEO at bsplindia.com. Let's start with you, Ajay, first. And what's your sense coming in for the pulses prices now? Because we've seen chana prices continue to decline. How much further down before you start buying into that?
Good evening, Manisha. If we see from last 10-15 days, we have seen continued pressure coming on the chana prices. No doubt last week we have seen some bounce because of holidays. Now this week there will be a holiday in spot market. So some low level buying was seen in chana prices. But overall, looking to the crop size and arrivals continue to create a pressure. So we can see the prices coming down around 3200 even. That will be a good level to re-enter in the market. But timing, maybe if it comes around 3500, we can take a short position. Still there is a drop of another 100-150 points can be seen.
Vijay, what's your sense coming in for sugar now? Because we've discussed this at quite length, but on the futures market with 1% of a cut coming in today, how much further down do you see it?
Manisha, I normally talk about the June futures because that gives me a comfortable margin in terms of time to expiry. And I see a closing of 3019, which is close to the 3025 levels, which I talked about as a buy limit. I think initiation of fresh long positions at this level are also advisable. And I would agree with what Desmond said. Sugar, irrespective of where they are headed in the prices are headed in the international commodities, I think